Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, we're going to cover a project that has always been my favorite project, but I've been looking at other projects and therefore this project kind of got sidelined. And recently I was following this project again and I just want to share with you guys what I think about this project. And this project is called Saffron.Finance or SFI. Again, as always guys, I highly recommend you to do your own research and learn about the projects that we cover in this video before you put any of your money on this project, right? And for this project, I suggest you to go to their website Saffron.Finance. You can also access their docs in order to read about the project, and you can go to app.saffron.finance slash docs, and that's something that you can obviously find on their website to do your own research, right? So what is basically Saffron.Finance and what kind of issue is it trying to solve, right? So based on their website, if you see, existing decentralized earning platforms expose liquidity providers to complex code-driven outcomes. Network participants must evaluate an array of catastrophic scenarios where the resulting state could wipe out their holdings or lead to significant impermanent loss, right? Again, they're trying to solve some really key issues, which is basically any decentralized platform that is currently existing is basically exposed to liquidity providers. They're basically exposing liquidity providers to catastrophic, code-related outcomes, right? So again, network participants basically must evaluate an array of catastrophic scenarios where the resulting state could wipe out their holdings or lead to significant impermanent loss. So every holder who's participating in a DeFi system is exposed to scenarios that could result in either leading to high impermanent loss or losing out your earnings entirely, right? It is hard to anticipate the net effect of extreme market volatility or focused economic attacks. Saffron narrows the set of possible outcomes by giving liquidity providers dynamic exposure. So basically, every liquidity provider is getting low exposure for the price movements because of the liquidity provision nature, right? When you provide liquidity to platforms like Uniswap, at least the version 2 version of Uniswap, you will have to provide two different assets, either two volatile assets or two stable coins, or even one volatile asset and one stable coin. And by doing that, you are basically like at a risk of impermanent loss. For stable coins, not that much. Like when you provide liquidity pool for liquidity for stable coin pools, then you may not expose yourself to that much impermanent loss. But when it comes to volatile assets, you face significant impermanent loss over the long run, which can potentially eat up your profits, right? But Saffron.Finance is basically providing liquidity. It's basically enabling liquidity providers to get high exposure to price action, which is not necessarily bad, because if you see, um, based on market volatility conditions, any regular liquidity pool will suffer from severe impermanent loss. But Saffron.Finance aims to reduce that, and they kind of like, in a way, sort of use market volatility for their advantage, right? Again, it is a little bit of a tricky concept. I highly recommend you guys to go through the docs and understand this project. It's a very interesting project and one of my favorite projects as well. So, pools. The Saffron.Finance system consists of pools of liquidity, and pools in Saffron.Finance collect deposited base assets from liquidity providers and deploy them on platforms to earn interest. So basically, what Saffron.Finance basically does is it consists of liquidity pools similar to any other platform, but the benefit of Saffron.Finance is that any pool in which funds are invested in, right, on Saffron.Finance, the funds basically are moved to earn interest in interest-bearing platforms, so that the person who's depositing their assets for liquidity not only earns from the liquidity provision, but they also earn behind the scenes through their assets earning interest, right? Which is also very interesting. For example, the first Saffron pool is the DAI pool, which launched with the DAI compound adapter. So again, whenever you provide liquidity, you are basically getting the maximum benefit through Saffron Finance. And one example of that is the DAI pool, where the DAI pool was basically launched with the DAI compound adapter, right? Adapters connect pooled capital to platforms. The first adapter is a DAI compound adapter. The DAI compound adapter is, as its name suggests, connects the DAI pool to the compound platform, giving DAI pool LPs the opportunity to pool together and earn interest on compounds. Again, very interesting mechanism. They use very intricate DeFi techniques to maximize yield. So again, don't be scared by the word adapters. It's a technical term used to define just the fact that whenever you deposit your liquidity provision is basically used for earning interest on interest-bearing DeFi platforms, right? And one such example is the DAI compound adapter, which we saw just now. As the name suggests, basically this adapter connects the DAI pool. Okay, if you're providing liquidity in the DAI pool, you will be able to use this adapter to get the DAI from the DAI pool to the compound platform, which is, again, Compound Finance is a very popular lending platform on Ethereum, giving DAI pool LPs the opportunity to pool together and earn interest on compound. So the system kind of pools all the DAI liquidity providers LP tokens and deposit that huge LP, which consists of everyone else's LPs, into compound, which earns further interest. Again, since DAI is a stable coin, there's a risk of collateralization ratio going low is very low, very low to non-existent, right? And therefore that kind of gives this platform this unique maximized yield earning capabilities, right? The strategy connects all pools and adapters together and selects the best adapter to deploy capital to every hour for each pool. It also generates and distributes SFI tokens to LPs at the end of every epoch. So again, they have unique strategies on their platform that helps to maximize yield. The strategy basically uses all the pools that they have along with the adapters, which we just discussed right now, to select the best capital earning pool for the particular holder, right? And this is done every hour for each of the different pools that they have. And it also generates the strategy basically also enables users to generate SFI token, which is basically the native token, to every LP after the end of every epoch, right? Again, they also have this mechanisms where epochs exist, where it's a specific period of time when LPs are rewarded with the SFI token, right? Epochs are 2-week periods where liquidity is locked and deployed to platforms by the system. So when you provide liquidity, you have a locked LP withdrawal mechanism, because once you provide liquidity provision, your LP tokens are locked for at least a 2-week period, so that it doesn't disrupt the strategy, right? That's being deployed for this for maximizing the yield. So when you deposit your tokens on pools, the liquidity is locked for 2 weeks, and the liquidity pool tokens are basically used to invest in compound finance to maximize your yield, right? At the end of an epoch, it is wound down, and the interest earned is calculated and can be distributed to LPs according to their proportional tranche ownerships. Again, there's a little bit of unique terms that is being used, but I'll try to break it down as best as I can. So after the end of every epoch, which is after the end of the 2-week period, the epoch kind of wounds down, which means it kind of like releases the tokens for people to take it back, and all the interest that the epoch the locked liquidity has earned through protocols like Compound Finance is basically calculated and distributed to people who provided liquidity, right? along with the SFI token rewards, obviously. During the wind down, SFI tokens are generated and can be redeemed using the same proportional calculation used to redeem interest, right? So again, SFI tokens are deposited on top of the SFI tokens are basically calculated, the SFI rewards are calculated based on the liquidity provision, and it's provided on top of the interest that's earned by the liquidity providers, which is also on top of the liquidity provision yield that they're already yield farming, right? So that's pretty cool. In the first version of Saffron, capital is only deployed on yield farming platforms, but in later versions of Saffron, we'll be able to create dynamic risk selection for LPs by adapting to different types of DeFi protocols. Again, in order to mitigate risks, there are later versions of Saffron are slowly obviously going to have better risk aversion platforms to averse risk as much as possible, which is basically the end goal anyway, right? The first epoch starts on 31st of October 2020, and that's when the first epoch started. So now we are quite a bit away from the first epoch, and therefore you are going to be, if you use the platform, you will be experiencing your LP tokens being deposited in less riskier platforms, right? So the SFI token, which is the native token of the Saffron.Finance ecosystem, the SFI token is capped at 100,000 tokens. So again, that's something that really made me like this project, because it's a token with extreme scarcity, and 100,000 tokens are basically nothing compared to several other projects that have like several millions to 10 billion tokens or something like that as max supply, right? So that's one thing that I really like about this token, and is generated every 2 weeks during the wind down of an epoch. So again, it's basically generated every 2 weeks until the wind down period for the epochs. Tokens are earned by LPs proportional to how many dollars per second they provided to the system for the duration of an epoch. So again, if you provide like a higher dollar value of your LP tokens, then you will be entitled to a higher proportion of the SFI rewards, right? SFI token subsidy is halved every epoch until each epoch number 8. So again, whenever an epoch is over, all the way till the 8th epoch, you will be experiencing like halving of the SFI rewards, which is obviously going to make it even more like a scarce resource, which will be price positive for the SFI token itself, right? From that point on, the system steadily releases 20 SFI tokens per epoch, 200 SFI tokens per epoch until reaching the 100,000 cap. So again, after epoch number 8, the protocol releases 200 SFI tokens per epoch as the reward mechanism, right? And this lasts until the 100,000 token cap, right? There are no fees on the Saffron in version 1. Later versions will introduce Saffron platform fees, and at that time, staking SFI tokens will earn SFI holders a proportion of fees incurred by the users. So again, the first version of Saffron.Finance didn't really have any form of fees, but again, later versions, which is the current, there are like different versions of Saffron.Finance that has come, and the current version is obviously like is going to be included with a fee which is going to be distributed to people who stake SFI tokens, right? When SFI token generation ends, fees will continue to provide incentives to liquidity providers. SFI tokens must be staked for LPs to join the enhanced return A tranche. So again, whenever you provide liquidity, you are obviously receiving not only your liquidity provision benefits or the interest that's earned by your LP tokens that's deposited in other platforms, and you're also earning the SFI tokens. But since SFI token supply is very low, the scarcity will eventually be extreme in such a way that there will be no more rewards that will be generated and therefore the fees itself should technically sustain the entire ecosystem and should reward the liquidity providers, right? Tranches. Pools are divided up into tranches, each with their own unique properties. There are three user-facing tranches for LPs to add liquidity into, and two back-end tranches that only exist at the smart contract level to provide LPs with additional optionality when adding liquidity. Again, it is a little bit technical, but all I want you guys to understand is that there are two types of tranche. One is basically to provide liquidity, and the other is basically for the smart contract to kind of like add additional optionality when it provides an additional optionality for users when adding liquidity, right? The risky high interest earning tranche, which is tranche A, earns interest according to its principal contribution multiplied by the tranche interest multiplier. Again, some technical terms, but all you guys need to understand is the highest risk tranche is tranche A, which also earns the highest rewards, right? The tranche interest multiplier defaults to 10. As a result, a tranche LPs earn 10x, A tranche LPs earn 10x more interest than they would without Saffron.Finance. Again, people who take the highest risky tranche, which is basically tranche A, will earn 10x more interest compared to people who do not use Saffron.Finance. Likewise, AA tranche LPs earn 1/10 of the interest that they normally would make. So basically, there are three types of tranches. S tranche is basically the less riskiest one, A tranche is the more riskiest one, and AA tranche is somewhere in between, right? So that's basically all you would need to understand. I would kind of like suggest you guys to read through the different tranches so that you can understand what is what and what you guys are doing when it comes to investing in this project or using the platform itself, right? Again, very important information. It is a little bit of a tricky project, but I do assure you that it's not as tricky as you think. You just need to read through the documents a couple of times. So I'm going to go to the app itself to see to show you guys how the app is basically going to look at. Again, when you open the app, you'll be prompted to connect your MetaMask. Since I'm using it on my phone, I can't show you guys the full picture, but once you connect with your MetaMask, you can obviously see your your adapter pool overviews, and you do have options to click the I button for information, and that will provide you different like even a bit more information on what this particular pool is or adapter is, right? And if you see, there's several adapters here. There's SFI staking pool here, and then you can kind of decentralized exchange overview, which is basically which gives you an overview of all the DEX based LP tokens, and you can see earnings redeemable is also mentioned here, estimated earnings, and the total value locked. Again, all of these will be available once you connect your wallet. It's quite an extensive website with a lot of information. Again, it may initially be daunting, but I rest assured it's not really that complicated at all, right? If you look at the upcoming epoch end date as well as the liquidity provider tools, these are tools that kind of help you guys understand the epoch. Again, everything works based on the 2-week period. So 2-week period is basically equal to 1 epoch. So every epoch you will be eligible to receive SFI tokens based on whether you're providing liquidity or you are staking SFI tokens themselves, right? So very interesting project. I highly recommend you guys to check it out. Maybe a little bit more complicated initially, but again, it's going to be easy to understand, right? So let's go to the CoinGecko page for Saffron.Finance, and this project is currently ranked 375th by market cap on CoinGecko, and it's currently trading at $1,385.04 at the time I'm making this video. Again, I understand that most people may think this token is expensive. It is expensive. That's also because of the fact that if you see, the max supply is only 100,000 tokens. This token is very unique in a way that it offers some really unique features for DeFi and optimizing yield and maximizing the yield for users who deposit or provide liquidity to certain pools. So I do believe that this project is extremely undervalued and it has a high potential to grow. This token price is not something that should deter you from investing in this project. Obviously, after doing your own research and coming to the conclusion that this project is worth investing in, right? But once you plan to invest in this, you can buy fractions of a token. You don't really have to buy the whole token itself. You can buy fractions of a token, and it's basically a long-term hold, in my personal opinion. This token recently had a 7.4% dip, which is also another potential reason to buy this token as well, right? If you see, this project is also available on Binance Smart Chain on top of which is also on top of being available on the Ethereum blockchain itself. The market cap is $109 million in market cap. Again, for a project that aims to maximize the DeFi yields, this project is still relatively undervalued to me, in my opinion. I do believe this project can easily cross the 100th ranking on both CoinGecko and CoinMarketCap based on its market cap value, and this is just probably the beginning for this project, right? As more and more projects, become interoperable due to different blockchain ecosystems, this project will kind of try to use its interoperability of blockchains in order to earn the maximum yield for LP tokens that is deposited in one chain, and you'll be earning rewards from another chain, right? So that's something that's definitely coming in the pipeline for this project, and I'm really excited for it. So based on that, I believe that this project's market cap is extremely undervalued, right? If you look at the max supply, again, as we discussed, 100,000 tokens, an extremely scarce token, so that's definitely helping. And if you see the circulating supply, it's somewhere between 80 to 90,000 tokens, so it's almost close to reaching its maximum supply value, which is something which we can't really say for many different tokens. There are so many tokens that have extremely high inflation. With the token that's currently circulating is only 5% or even less than 5% of the max supply, right? That's because the max supply is also extremely high. But this token, if you see, it's expensive at first, but if you see, the token is already reaching this scarce territory, which will literally skyrocket this token's price once this token gets a lot of adoption, which will come soon with all the interoperable protocols that we will be seeing, right? So if you look at the charts here, again, you can clearly see that the token price was, the token price data is available on CoinGecko since mid of November 2020. It was trading at $102 per token. It was pretty volatile initially, but then the real action started mid-January, when the token price went from almost $750 to an all-time highs of about $2,650, and then it kind of went down and then was kind of volatile for the few weeks until the end of February or early March, which is when the price started crashing, reaching a local bottom of $1,200 before coming back up, reaching $2,200, and now it's kind of at the bottom right now. It's still, if you see, setting higher highs and higher lows, which is a very good indication that this project is actually being recognized heavily by several investors who are piling in, who are looking for an opportunity to pile in on this project. Because again, it is a little bit of a complicated project to understand, but once you understand it, you will know that this project is exceptionally doing a lot of great things that many DeFi projects have failed to do, which is using multiple different strategies to earn the highest yield, right? And also, if you see, the token price is set to make some really new gains because of how this project has retested its previous lows, which was 1,300, and then this token can definitely pop up back above $2,000 per token, right, in the USD comparison. If you take the Bitcoin comparison, on the other hand, again, similarly, the price volatility has been pretty much reflective of the dollar comparative for Bitcoin comparative as well. And if you see, the token price was initially worth 0.008 satoshis per 0.008 Bitcoin per token, and then it was extremely volatile, and it kind of cooled down on January 3rd, where it was 0.006 Bitcoin per token, and then reached an all-time highs of about 0.05 Bitcoin, which is also 5 million satoshis per token, and then crashing back down late March, reaching 0.02 Bitcoin per token. So now it's kind of like moving sideways, pretty much in the lower trend here. I do believe that this project may go below 2.5 million satoshis mark, but it's going to be interesting to see, because there is extremely low number of tokens, the volatility is going to be extremely high, right? So it is going to be interesting to see how this token price will be moving in the upcoming weeks. But I do believe that this token is extremely poised to make some really new all-time highs, right? If you see the Ether comparative, you can clearly see that it was worth 0.3 Ether per token, went all the way up to an all-time highs of about 1.7 Ether per token before crashing back down to 0.23 Ether per token, and then going back up mid of March to about 1.5 Ether per token, and now it's pretty much in a downward trend. So I think this token is a really good buy opportunity in the Ethereum trend, compared to Bitcoin or Bitcoin or USD trend, because Ethereum itself is going up right now, right? And if you see, the volume candles are pretty decent. Again, so it is a volatile token, so I wouldn't really worry about it. It is a good time to buy because it's pretty much in the lower end, where it is going to set up some new all-time highs pretty soon, right? If you look at the exchange, for example, it's available in Uniswap, SushiSwap, and a couple of other exchanges. But when it comes to decentralized exchanges, it's only available on SushiSwap and Uniswap. I don't really think it's available on PancakeSwap yet, but again, I would have to check into it. But if it is available on PancakeSwap, then PancakeSwap is the best place to buy, because cheap fees, high transaction speeds, Binance Smart Chain, so it's relatively secure compared to many centralized exchanges, so that's pretty good. But if you look at some centralized exchanges, I suggest Poloniex being one of the few reputed exchange. Poloniex, as well as who.com, is also not that bad, but I wouldn't really use the Indo DAX for buying SFI, right? Again, really good project. What's my final verdict on this one? I'm planning to buy this token after I accumulate some capital. This is a very good price point to buy, in my personal opinion. I've been following this token for a while, and I do believe that this is definitely poised to make another new all-time highs. Again, a good project that's extremely undervalued and pretty much off the radar in many people's plates. I like the market cap being not too good and not too bad. It's still considered as like a low market cap token. It can definitely cross the $500 million pretty soon, and the max supply and the circulating supply are extremely great. The max supply is extremely low. Circulating supply is obviously putting the token in a scarcest position sooner than later, right? And if you see the charts, you can also see that the token has been setting higher highs and higher lows. So those are some of the really good reasons for this token to literally pump. And if you see the exchanges as well, there's not a lot of tier 2 or tier 1 exchanges that have listed this token. So this token does have some incredible high potential and some bright future ahead, right? Again, that's just my opinion. Please do your own research before you put any of your money on this token, right? Remember, guys, you guys are not regular investors. You guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please click the like button and subscribe for more videos. See you in my next video. Bye.